There are two websites that are my go-to from when I want to understand the fundamentals that are driving the market at any given time. One is ING Economics, and the other one is Forex Live. What you're looking at is the home dashboard of ING Economics. I think they really do a good job in deep diving into some of the important macroeconomic drivers of long-term interest rates, like the credit cycles. They even give a view of what is happening in different markets, including even Africa. So this is just a view. I usually come from what you can see. This is the home screen. I prefer coming to markets, go to FX. Then you're able to see any news that they have, their forecasts on probably what the Fed is going to say, what they think will be the impact on the market. You can see they have an article on the yen, central bank views, and it's just a really good website for me to be up to date with what's happening in the markets fundamentally. I did say that I don't trade fundamentals, but it's important to understand what is driving a given market at any given time, because charts don't just move up and down, they're driven by macroeconomic factors. Long-term macroeconomic factors can be interest rates, inflation, which are largely the main drivers. And it's always important to keep an eye out on central banks' verbiage. Is it hawkish? Is it dovish? And I like coming to places like ING to help me break down the statements. Yeah, just get a view, just a summary. Don't really deep dive. I can go to credit. I can read about credit cycles, see areas like the euro, ECB, bond spreads. You can go to markets and again check rates. They have a lot of information in here. There's about commodities, especially for currencies that are commodity driven, like the Canada, which is largely like Canadian dollar, use CAD, because Canada is really linked to oil prices, price movement. If you look at the Aussie, it's all about minerals. So it's important also to get a view of what's happening in the commodity market, especially if it impacts currency pair that you're trading. We have news on gold. So this is a good website to always come once in a while, have a feel of what is happening in the market fundamentally. Next, I want us to look at Forex Live. So this is the Forex Live website. This is how it looks. They even do technical reviews of pairs. They deep dive into the news releases. I like it because of how they deep dive into the news releases and just give you a view of what the data means. I like also how they usually break down the, like, let's say Jerome Powell speaks, they'll give you a summary of what he said and the key impacts. So I really like these Forex Live website. I don't check their technical reviews of pairs, because I believe for you to succeed as a trader, you need to have your own independent view of the markets. But since I lack on the fundamental side, I usually come and just see what news releases are impacting the market at any given time. This is how it looks like. You can click on one. We can click on this website is on yields, just to see the stories are really summarized. That's why I like them. Just to tell you yields have risen, blah 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 blah. So these are two websites that actually come for fundamental news. And next, I want to show you a website that I use to check global interest rates. So take a look at the next website. Here is where I go for my rate information. So if I want to know what's the current rate on, let's say, the USD, what's the current Fed rate, it's easy for me to just scroll and you can see it's 5.5. You can see Australian is 4.35. Usually what happens in FX, you'll see a lot of flows to economies that have high interest rates. I think when the Fed started rising rates, we did see a lot of flows to the dollar. That's why the dollar increased in the last 2 years. We did see a lot of flows to that because of the carry trade. The carry trade is where you find like the big hedge funds will hold positions in currencies that give them high interest rates, and currently they hold a lot of dollar positions just because you see the rates are 5.5. But given we expect these rates to go down, we are seeing them, of course, reduce their positions in some of these dollar assets as they flow to probably other riskier assets like crypto and probably stocks and other economies that are seeing an increase in rates. You can see for the pound is 5.25, For the Canada is 5, European Central Bank is 4.5. If you click more, it should give you more. It gives you a view of the global interest rates. You can actually search for any country and you'll be able to see what's the rate. You can see for the Japan, it's negative 0.1. It has been this way since 2016. Quite a long time to maintain negative interest rates. And now there's talk of rates going up in Japan. That's why we probably start to see some of flows to the Japanese yen. Probably see some of the investors buying the yen as anticipate these rates to start going up. But for now, I think the rate differential between, let's say, the dollar and the yen is still high. So I still expect to see investors favor the dollar to the Japanese yen. So yeah, that's a summary of the three websites that I like looking at. I've taken you through ING, I've taken you through Forex Live, and the Global Rates website. If you have these, it will be good, especially when you're sourcing for news. And I'd encourage you to be visiting these websites once in a while. Thank you.